everyone. Screen share is active, sound is active. Hopefully all of that's coming through fairly well. It's just gone past 10 a.m. Here in the UK local time. It is Monday the 4th of May 2015. Welcome everyone. On the economic calendar this week, it's quite a busy economic calendar as it happens. Not so busy today, although there are a lot of minor items highlighted on it. But tomorrow on Tuesday, we have the Reserve Bank of Australia delivering their latest rate and statement, likely to be a fairly volatile affair. Also, later tomorrow evening, we have unemployment rate data coming out of New Zealand. On Wednesday, and not a great deal of interest. Janet Yellen does have a speaking engagement on that day, which might be worth having a listen into. Thursday, Australian unemployment data, and as well, we have elections here in the UK, and then Friday is going to be topping things off with US non-farm payrolls, and I guess everyone knows the kind of volatility that surrounds that particular event. So those are the items on the calendar that I'd be looking out for this week. All right, let's turn our attention towards the charts. I've got several to highlight for you guys this morning. And I'll begin here with the Euro USD. She made quite a sharp rally over the course of last week. I wasn't really expecting for the 1050 area to be breached. I saw that 1050 as a established resistance level, but she managed to make her way through that, and that's all fair and good. Considering the events which are coming this week, so we do have NFP at the tail end of the week, so this is one consideration. There's NFP coming. The second consideration that I have, and probably the more important one at this stage, is that we've just had a new month begin, and what with it being a new month and the price hanging near the monthly open level. So here is the monthly open level. The rule of thumb is that the month is either going to be up or down, and generally speaking, over the course of the last few months, Euro USD has had the capacity to swing 300-400 pips, a lot more than she does ordinarily. And so if we're catching a break in the direction of the month during the early stages of the month, then that gives us the capability to pick up quite a lot of pips just by analyzing the direction of the flow or by analyzing the direction of the monthly candles. So there's that cluster there at the 112 handle, and as a general rule of thumb, right, as a rule of thumb only, if the price is remaining below 12, then there's good reason or there's good logic or rationale to be staying on the short side of the market. But if it happens that she breaks north of that, you're going to need quite a strong technical trigger in order to be playing the short, because at that stage what you will be doing is to be fighting the direction of the month of May itself. So above 112 the bulls will be in charge, and below 112 it's the bears in charge. And so what you have to do is, generally speaking, as a rule of thumb, particularly when the price is near those levels at the beginning of the month, not to be fighting the direction of the flow. That's especially important. All right. As far as the technical levels are concerned, or the levels of interest, I think we, with a little bit of in hindsight, that top could have been forecast, and would be looking at something like this. Right, so just connect the highs there, something like that. It's these two here on the left-hand side, so you're connecting that high from the 20th of March and that high from the 29th of March. And considering the sharp nature of the reaction on the underside of that wall, then it would not be unreasonable if the price went and pushed that up to that level again, for you to be expecting a sharp reaction off of that again, even if she creeps a little bit on the underside. But if I was going to be playing shorts above the 112 price handle, I'd like to trigger that on the underside of that wall. And you might even caution and say, you know what, we'd want to see a bearish hourly candle off of it first, and that would become the trigger condition for placing the trade. And after that, you'd want to see a break below 112, and if she breaks below 112, that would kind of give you the confidence to say, hey, you know, maybe I can hold this. I can hold this a little bit, just a little bit longer. All right. So that's the first wall that I've got marked on the Euro USD. A second wall that you'd want to have marked, and I think it would go something like this. You just want to mark the wall on that double bottom there. Something like that. Okay, so this is from the 27th and the 27th and 28th. 27th, it's all on the 27th. Yeah, 27th and 28th of April lows. Just mark something like that, and again, the expectation would be it's a support wall, and so if the price makes it down to that, you'd expect for the price to kind of bounce off of it. Sometimes you get the bounces off of those levels, and you get a kind of full swing off of it. Other times you get a minor bounce and then a breach. If you get that breach from a risk definition point of view, it would become easier to play the short on a retest of the underside of that particular wall. And so again, that's something that I'll be monitoring for the Euro USD. I think these are the only two walls really that you need to have marked in the near term anyway. And I particularly like the upper one, especially if there's a sharp rally towards it on a news event. So if it happens that the price ends up stalling here over the course of the week, right up through till Friday, and then on Friday you get a very sharp 100, 150, maybe even 200 pip rally by that stage, going and smashing the underside of that wall, I would love to short that under those kinds of conditions, particularly, and I would expect an equally sharp reaction of it, and for the price to collapse off of it, if it happens to play out like that. So we have something above the price and we have something below the price here, and it's just a question of whichever way she wants to break. As far as the general bias is concerned right now, she's below that 112 price handle, and so long as she remains below the monthly open, then we're quite happy actually, just on the basis of flows in the near term, to maintain a short bias. But above that, you need technical triggers to be playing the shorts on this particular instrument. All right, USD JPY. So this particular instrument has been in a long sustained stall. She's been stalling now since November last year. So this is like, she's heading into the 7th month of a sustained stall. And I think that, if she stalls here for the entire year or something like that, my suspicion would be that when this stall finishes, she'll start breaking down. That would be the kind of suspicion that I'd have. So what I need more than anything else is some kind of rationale or some kind of trigger condition or logic that would permit for entertaining those short trades, I guess, if that's an idea that makes sense. So I'm going to show you what I'm looking at on the instrument, which is that on a wider time frame, and we're going back to the beginning of this year, really, maybe February, there is a support wall that the price has been reacting off, and you can take something like this against those lows and something like that against those lows. You might even take something there like that, okay, and just have those marked. The idea being that so long as the price is above support, and you know that's quite a clear identified support, and she smashed off of that now. So you know it formed there, and then she smashed off of it once, twice, three times. There's a minor one there, that's four, major five, major six. She smashed off of it six times. Eventually, what's going to happen is that she's going to make her way down to that, and I very much suspect that the next time she makes her way down to that, even if she stalls on top of it, that stall would probably become an opportunity to sell the instrument. And if she doesn't stall, if she can collapse through it, then on a pullback, because that's been a support, you'd expect resistance to happen in the same place, and then a follow through to the downside on this particular instrument. So the default position on USD JPY is long. The default position is long because she's above the support. But what would make a very sweet technical short trade would be a breach of that support. And getting in that reversal trade, technically, I think you'd get much better risk definition. It would be a much sharper entry. And so that's the kind of play I would be looking for on USD JPY. And again, there are enough events on the calendar this week which may well allow that to happen, right? So maybe eyes on the NFP data for that, and maybe if Janet Yellen can suggest that the Fed is going to pull back from the brink, and maybe they don't want to be raising the interest rates as the market expects them to do in June right now. And you know, that's not unusual. We've seen practically every central bank kind of do that, you know, to suggest that rates are going to go higher, and then when they reach the time for it to actually happen, say, well, you know, what we actually meant was about another year down the road. It's not entirely unheard of, right? So especially if you want to consider the track record of the Bank of England on this issue. So if that happens, that is the kind of fundamental trigger that could severely start affecting the value of the US dollar itself. A lot of the flows that we've seen into the dollar, they just kind of reflect the expectation that that event is kind of close to hand. And so any indication that it's not that close, that it's not going to be next month or the month after that, and that it might not be in the third quarter either. And if it's not going to be in the third quarter, then it's not going to happen until 2016, right? That's that would be the kind of thinking that would be taking place amongst market participants. So just eyes on that, eyes on that, and as mentioned, you know, the NFP, that in itself could become a potential data trigger to cause the collapse here, if indeed that's something that's going to happen, right? But you want to have those lower support walls marked on the USD JPY. What else are we looking at this morning? Euro GBP. Euro GBP, we like the idea of selling Euro GBP, but we're not sure why we like that idea so much. Let me show you. Yeah, I think there's a technical support resistance kind of thing going on. But she gave quite a unforgiving rally. You know, that rally there is quite unforgiving, right? You got a break, a consolidation, a break, a consolidation, a break, a consolidation. Anyone who was trying to fade that rally would just get knocked out all the way up to that swing point. Um, but it looks as though she's about to give it back. And so I'd like to be shorting the Euro GBP, but I'm just kind of working with an extra air of caution this week, which is to say the sharpest trigger that you could have would be another test on the underside of that wall, right? So I like that wall. I think it'll make a good short trigger. And it's just a question of whether she can pull back to that level early enough this week without having fallen much further than where she is right now. And if she can do that, then I'd like to short the underside of that particular wall. So eyes on Euro GBP. It's just a technical trigger, and there'll be a technical short on the underside of that. So it's worth keeping that marked on your charts. All right, some of the Aussie crosses, right? So first off is GBP AUD. If you've been following here for a while, you know I've kind of come here quite often on GBP AUD. The first time I started talking about it earlier this year, when the price was hitting up at that 2 level, and I forecast a downside target of 189. More recently, I've been talking about downside targets on GBP AUD extending down to the 179 price handle. So still, 1,500 pips from where the price is currently. She's gone into a little bit of a sustained stall, and so what I've been looking for is a secondary trigger in order to allow me to initiate that short trade. So what I'm looking at is just something like this now. Okay, that's the lower wall I want to mark. So you can see where it originates from, and there is every kind of potential here that she's been channeling. You can kind of see a significant angle. There's a significant angle there inside of that in that particular trend wall. You copy it to other places on the chart, and it just seems to fit wherever the price has made support and resistance. So things to note on GBP AUD. All right, things to note on GBP AUD. First off is 90.40. All right, 90.40 is your yearly open price, and the instrument has worked her way significantly below that, and she's worked her way significantly above that. And we've just hit the month of May, and she's coming back and sitting on that yearly open level. Right now, as far as candle technology is concerned, the yearly candle is either going to be up or it's going to be down. The worst thing that could happen for me right now is that she decides just to stall at that yearly open price. But otherwise, a sensible assumption tends to be that every candle tends to have a body, and if it doesn't, it's a rare occasion when it doesn't. So, your dojis and things like that, they don't happen every single candle, right? But most candles tend to have a body, and so my suspicion would be that by the end of the year, by December, she's either going to close up or she's going to close down on where she started. But I wouldn't ordinarily be expecting her to close at the same price. And there's still several months to go yet till the end of the year. So so I just want to note that first off, that we've got this 90.40. That's the yearly open price, and we've already had a kind of significant high in the year. We've already had a significant low in the year. So here's our significant low, and that's somewhere near the 82 price handle, and that's just above the 2. That's the kind of significant swing high of the year. But what I would like to see now, having that downside target, so that's my downside target there, down to the 79 price handle, is actually a breach of that lower channel wall. And you can either chase that breach, or you can wait for a kissback on the underside. That kissback on the underside doesn't always happen. But if the price is breaking and you're getting your kind of consecutive H1, H4 closes below the 90/40 price handle, then I think that that opens up 179 to the downside again. All right. So it's all about this yearly open. It's just interesting that we've got this lower channel wall passing through that level near where the price is right now. And so I think that that becomes quite a good technical trigger to be looking for the short play on GBP AUD. We've got the elections coming up this week, and considering considering the volatility that we experienced during the last election, on the day of the election, the price kind of flew around almost 500 odd pips last time round. It may not be unreasonable to expect a similar kind of volatility. In fact, a friend of mine posted a chart somewhere on Twitter or something showing that over the course of the last 4 or 5 general elections, the volatility that's experienced on GBP USD and a tendency for cable to actually weaken during that process. I think it was something like 7 times out of 10 over the course of effective. So, like, it was like 4 out of 5 times or something in the last 5 general elections. So we've got a nice trigger here, a technical, and if that's going to happen, I think that you can build quite a good short position, and with a reasonable rationale too, right? So it's about that open level. It's about that yearly open. We have a support wall on the channel there. You merge that thinking together, and it could give you quite a decent, trade there, and quite a decent entry there, but with the expectation of a much more significant move to the downside. So that's the GBP AUD, right? My bias is short, and that would be my trigger on GBP AUD. And you could kind of even choose to go at market, right? But I would consider that a little bit aggressive right now, considering the distance from that trigger. Euro AUD is giving a similar signal, for want of a better word. I hate that word, signal, but it's giving a similar kind of signal. And what you want to be doing is just marking the wall something like this. Okay, that's where you're marking it, right? So there's your low, and there's your cluster resistance. And you can see that pinprick kind of sharp reaction you're getting there at the swing high, 43.57. And so the expectation would be, considering the sharpness of that reaction, any kind of pushback to the underside of that wall, I would be, and even if she creeps a little bit, that's not problematic, right? But so long as she remains on the underside of that wall, I would love to short the instrument there. And I think you can have very good risk definition. You have very, very good risk definition there on the underside, and then would be looking for a pushback to the 40s. And if she's going, sub 40.80, then I think you, at that stage, you'd start expecting a much more substantial follow through to the downside, and maybe even you'd be looking for a revisit of the lows there into that 37.36 price handle. So if you look at the nature of that rally there, that's a sharp rally, right? She pushed from 36 to 44 so quickly. There is going to be some element, if it's not just basic retracement or shallow retracement, there's going to be some element of retracement there. So like, it doesn't matter whether it ends up being shallow or whether it ends up being a deep retracement, but we have a nice technical resistance, and that pinprick off of it just confirms the reaction, and it confirms the level. So any subsequent strikes on that, I think it would be worth having a play on that. It seems to be explaining the price behavior quite well. All right, last one up this morning, which I want to be looking at, is NZD USD. I'm just going to remove this. That's not of so much significance to me. I think I've mentioned it here before, but the Reserve Bank of New Zealand has kind of expressed a desire that for a fair valuation on the Kiwi, and they believe that the fair valuation on the Kiwi is at the 65 price handle. So with that in mind, and just considering that she is able to kind of sustain below the yearly open, that's where we've had the last swing failure, just below that yearly open. We're kind of thinking, you know what, it's probably still worth selling the rallies on NZD USD, and that statement would hold true so long as the price can remain below 78, right? So consecutive H1, H4 closes above the 78 price handle. You've got to leave it alone at that stage. But otherwise, I think you can probably keep on selling any rallies in the Kiwi dollar. Now, there are two levels of interest for me on the Kiwi dollar in the near term. First up is just the direction of the month. I established the direction of the flow on the back of that, and that comes in at 76.32. So from a technical point of view, so long as the price is below 76.30, so long as you're getting consecutive H1, H4 closes below 76.30, if you're taking casual shorts, you'd be positioning your stop above that level, because if the direction of the month is changing, then you'd say, well, let me set aside on this. So that's one. Aside from that, if you're looking for a technical resistance, then I suggest that you be marking something like this. And again, I'm kind of moving forward and imagining what might happen during NFP. But if she makes a sharp break during NFP and hits the underside of that, I think there will be a sweet spot on that trend line, and you'd be wanting short that wall as a resistance, right? So this is where it happens on a news event, and maybe she stalls the greater part of this week, and then during the news, when you get that kind of flash move, she just whacks up the rallies and whacks the underside of that. That is where I'd like to. That would be the ideal condition in which to be trading the underside of that wall. But I like that for a resistance, and I like the idea that she may be kind of topping off here, and maybe just going into some kind of rounding structure, and so you want to start seeing, as far as the wave structure is concerned, some lower lows, and then the suspicion would be that she is actually ready to make that firm break to the downside. So more of a Kiwi bear than a dollar bull, right? I'll explain it in the context of Kiwi. That this analysis to do with the Kiwi, and that is the I think that is the kind of important issue with this one, that it's going to be about Kiwi weakness. And so again, we want to keep an eye. We've got that unemployment data coming out this week. We want to keep a little bit of an eye on that, and we just want to make sure that be sure that our long-term expectation should marry up with maybe the economic reality in New Zealand, right? So quite often we can build these expectations, and these news events end up becoming triggers for that. And so it'll be interesting to see how that plays out on this particular instrument. All right, we do have a little bit. Those are the charts I wanted to look at. We have a little bit more time. Maybe it's worth just taking a quick look at the dollar Canadian, right? So dollar Canadian, she breached a couple of levels. Now, I've just got two walls marked on the dollar Canadian. There's this one in the first instance, and I like the upper sloping one a little bit more. Again, it's one of those plays, it's kind of support and support. And so if it happens that she's testing the underside there, or particularly if she's testing the underside here, I'd expect quite a sharp resistance reaction on the underside of those walls, and I'd be interested in playing those particular trades. As far as momentum following through to the downside here on the dollar Canadian, so right now you're looking at something like that happening, and what you would be doing is just marking the shallow channel there. All right, so so long as she's kind of sustaining below that, the general kind of expectation would be for her, even if she rallies a little bit further, so long as the price is remaining below that, for a little bit of further follow through to the downside on the instrument. And if you had to highlight a downside target, I think it's just she kind of hit that support wall already, isn't it? All right, so maybe she goes and double bottoms on it, but if she breaches that, I think that would be a big deal as well. Clean technicals on dollar Canadian, right? And there's nothing better than when you get there's nothing sweeter than when you get a clean technical. In fact, let me just see if I can. So I did it with a thick line, but I'm going to do it with let's actually mark it on the chart. Grab it. There you go. Okay, there. That makes a bit more sense now, right? So resistance on the underside if she rallies to the upper, and in origin, this here is a support wall. All right, just be kind of aware of that, right? So you're connecting support with support. What you've got is a support wall, quite a sharp support reaction, and ordinarily, what you would expect here would be something like this, and then a move to the upside. Yeah. Okay, so the default on the wall is support, but if you find the wall being breached, then the test on the underside, I think that becomes resistance, and you could at that point look for a further sustained follow through to the downside. So dollar Canadian, I like it. I like it because you've got some very clean technicals there, and when they're that clean, it's quite easy to play those support resistance reactions off of it. Okay, folks, that's your lot this morning. Thank you very much for attending. Okay, I think I've missed a question. Greg, you're probably asking about USD JPY. It does come in 1850-ish, but you just want to mark the lower trend wall, and whatever price it is at when that gets retested after it being breached, that's the price it's at. But it is roughly that 1850 level, but the support wall is not a horizontal, it is slightly sloping, so the exact price might be a little bit different, right? So yeah, but you'd have something like that mark there. That should be enough to do it. Yeah, okay, that's your lot, folks. Thanks very much for watching, and if you get a chance, don't forget to check out my website. There's a lot of material on there that may be of interest to you. I'll be back here in a couple of weeks' time, so that's going to be on the 18th of May. FX Street will be sending out a reminder as usual. So until then, trade well, stay safe, look after yourselves, look after each other, and I'll see you the next time. Cheers, fellas. Bye.